Hello and welcome to the Joe DeLisi Financial Advisor Podcast. I'm Joe DeLisi and I'm going to speak to you today from Florida. It's our East Coast version of the pod today. Quick and easy one. I wrote down a note on April 25th so that I could come back and look about a month later. And we're 5 weeks from that or so. And what I wrote down was the talk everywhere on April 25th was the absolute collapse of shipping into Los Angeles ports, and that the economy was likely going to collapse in 3 to 4 weeks. This was everywhere. I don't know if you guys saw it or not, but I like to kind of just peruse through X and just various websites, CNBC and Fox and places like that. And we saw that. We saw that a lot, especially on social media. I mean, it was really everywhere. And it reminded me back when we were all shopping for toilet paper, if you remember that, during 2020. It was the same kind of stuff. I mean, people were saying, look, it may not be toilet paper, but it's going to be other stuff. It's just going to disappear. And look, I'm not an economist. I don't know. I really don't know. What I do know is that we see these things all the time and they hardly ever materialize. So I wrote it down and I wanted to check. And so here we are today. Waking up today, here are the headlines. Market rallies on strong U.S. jobs report. S&P 500 touches 6,000. That was on CNBC this morning. Today's Friday, June 6th. That's a recording of this podcast. Yahoo Finance says U.S. economy adds higher than expected number of jobs. And on Fox Business, they said, in addition to those two headlines, that unemployment remains steady. On these headlines, the market has jumped. In addition, family and I went out shopping last night. We got down here. We're in Naples, Florida. We're going to be down here for about a month. We went to the grocery store to buy the things we need. And guess what? Shelves were full. We were at Target the day before for stuff that my kids wanted. Guess what? Shelves were full. Now, I don't know what happens. Like maybe there is a situation where we're not going to have stuff in another month or two. I would say it's probably unlikely. I mean, everyone who seemed to know what they were talking about was saying that right now, not just when we have no shelves or shelves full of nothing, but the economy would collapse. So obviously that's not the case. And this is just a quick reminder, very fast podcast today, that we cannot engage in fear and speculation and gambling. And it cuts both ways, by the way. I'm also recording this pod a day after the very public feud between President Trump and Elon Musk. And by the time you listen to this, I don't know, maybe they'll have made up and they might have kissed and made up by then. I don't know. But what I do know is that Tesla stock fell about 14%, according to Yahoo Finance yesterday. And I didn't get this call, but I'm surprised I didn't. Every now and then, a newer client will ask, hey, should we buy Tesla? No, you shouldn't speculate and gamble on any individual position. Now, look, a lot of you might be thinking, well, that's insane. It's down 14%. Of course I should buy that. Well, here's what I would suggest to you. Just think this through for a second. How much money would you actually have to put into that trade for it to materially impact your financial plan? Because the purpose of this money, the purpose of your investments is to fully fund your financial plan, which holds all of your hopes and dreams and family's desires. And there's no way that you're going to be able to, I mean, look, you put $10,000 into Tesla stock, and even if you made 14% on it the next day, because it might go up, what does that really do for you? You'd have to put a significant chunk of your net worth, if not all of it. You'd have to push all the chips to the middle of the table and speculate on that individual stock. That's not what we're doing here. So we're not going to listen to the people on social media saying that because shipping is down due to tariffs, that everything's going to collapse. And so we're not going to pull our money out of the market because of that. And conversely, we're not going to look at things like a 14% dip in a stock because of a public feud between the leader of that company and the leader of the country, and then push all the chips to the middle of the table and hope that you make a bunch of money on it, when honestly, you don't even need it. We don't need to speculate and gamble. We don't need to listen to doom and gloom. We don't need to listen to the fear. All we need to do is just, it's going to sound very boring. And I think Warren Buffett is the one who said that good investing is boring. It's about as exciting as watching paint dry, I believe he said before, because that's really how it should look We should be buying several markets around the globe. We should be rebalancing every quarter. We should be not speculating and gambling on individual positions or even chasing hot markets. And if we stick to it, the capital markets will reward you with risk premiums, with payments to you based on the risk you're willing to take. So, great news. The world didn't end. I didn't think it would when I wrote that down in a note for myself on April 25th to check. But I am happy to report to you it didn't end, and I'm happy to report to you that the shelves are still full, and I'm happy to report that the markets are still going up, and it's really actually turning out to be kind of a good year in markets so far. We're about halfway through, and without giving specific data, the S&P has obviously recovered from its significant downturn early when the tariffs were announced, and international stocks continue to do well. International value stocks and small. I mean, we're in a good position if we're diversified. So, no panics, no chasing, no speculating, just good old-fashioned asset allocation into multiple different markets around the globe, tilting towards small companies, tilting towards value companies, both internationally and domestic, and we rebalance to it and let time take care of the rest. And that is all for the podcast today.
Joe DeLisi, registered representative and financial advisor of Park Avenue Securities, LLC, PAS, OSJ 5280 Carroll Canyon Road, Suite 300, San Diego, California, 92121, 619-684-6400. Securities products and advisory services offered through PAS, member FINRA, SIPC, financial representatives of the Guardian Life Insurance Company of America. Guardian, New York, New York. PAS is a wholly owned subsidiary of Guardian. Westpac Wealth Partners, LLC is not an affiliate or subsidiary of PAS or Guardian. Insurance products offered through Westpac Wealth Partners and Insurance Services, LLC, a DBA of Westpac Wealth Partners, LLC, DeLisi, CA, Insurance License Number 0D34103. This podcast is for informational purposes only and is not to be construed as tax, legal, or investment advice. Although the information has been gathered from sources believed to be reliable, please note that individual situations can vary. Therefore, the information should be relied upon only when coordinated with individual and professional advice. Guest speakers and their firms are not affiliated with or endorsed by PAS, Guardian, or Westpac Wealth, and opinions stated are their own. Guardian, its subsidiaries, agents, and employees do not provide tax, legal, or accounting advice. Consult your tax, legal, or accounting professional regarding your individual situation. All individuals and investment strategies contain risk and may lose value. Diversification does not guarantee profit or protect against market loss. Equities may decline in value due to both real and perceived general market, economic, and industry conditions. This material is intended for general use. By providing this content, Park Avenue Securities, LLC, and your financial representative are not undertaking to provide investment advice or make a recommendation for a specific individual or situation, or to otherwise act in a fiduciary capacity. Past performance is not a guarantee of future results. Indices are unmanaged, and one cannot invest directly in an index. References to specific securities, asset classes, and financial markets are for illustrative purposes only and do not constitute a solicitation, offer, or recommendation to purchase or sell a security.